What a crazy close to the market today. The market is up 1.4%, a little over 1.4%, rallying into a CPI reading tomorrow morning. Probably one of the last data points the market's really going to hang its hat on before the end of this year. And boy, oh boy, does the market have this right or wrong. Well, I'll tell you what, the VIX is up almost 10%, closing the day out at almost $25. The VIX jumped the VIX jumped nearly 10% intraday while the market was pushing over 1%. That is a heck of a move, guys, just to give you a heads up. So what is going on? Why are we seeing this rally? Well, it's a few different things here. We're starting to see people position themselves for a pretty volatile week here. When we take a look at what is going on, a lot of put buying today, roughly 1 million more puts versus calls. So people are positioning themselves for the end of the week. And this has been kind of the routine here, guys. We get a rally into the Fed's meeting, we get a rally into data points, and then what happens is the data points let us down and we sell off. So even though the market is up 1.4%, over 1.4%, pretty much across the board, we can see people actually positioning themselves to the downside. When we take a look at the VIX buying, you have the calls outweighing the puts as far as the VIX goes, which means people are implying that there's going to be serious volatility, most likely tomorrow, as we have options expiration day at the end of this week. So people are positioning themselves defensively in this market, which is causing some divergences when we look at what the VIX is doing versus what the S&P is doing. And then when we look at the overall chart, we can kind of get a clearer picture to what is really going on here. When we take a look at this trend line, we can see that the trend line is absolutely in play, and every time we've hit this trend line, we've sold off. And the crazy thing about this is that you usually sell off right on the data points, whether that's Jerome Powell coming out and raising rates, whether that is a higher than expected CPI reading. That's normally where we hit this top and the market sells off and hits newer lows. And still, the trade is that we have lower highs and lower lows, even as of today and the crazy move that we had. Now, this is almost a kind of a fake out move here, in my opinion. We're getting this big buying pressure coming in right before data points, but we can see that people are actually positioning themselves to the downside with options. The odd thing is when the Feds come out and speak or data comes out, the market usually initially gets this wrong and we get the real reaction a day or two after. So I tend to believe that the way that people are positioned, they're positioned to the downside. So we maybe trade sideways to up, as the VIX is probably going to cool off considering the substantial move it had today. Now, while I think that this move is exhausted, could it go up another 1 or 2%? The answer is yes. I think there's about a 1 to 2% up move here. And I tend to believe that there's about a 5 to 6% down move, depending on what the data is tomorrow. Core CPI is looking to come in right around 0.3%. Now, I've heard as high as 0.45%, which in my opinion would catch the market off guard and tend to lean more towards the downside that we've been looking at people positioning themselves for. Now, once again, I would not be surprised if we actually get a counter reaction to this, meaning that tomorrow, if CPI comes in hot, we sell off initially, but end the day green, and the true sell-off comes at the end of the week when options expiration takes place and we get the volatility that comes in with options expiration. Along with that, we would get a reposition probably to more defensive once again on the market, as this rally has been pretty substantial. Now, even if we get a pretty good CPI reading, I do think we will probably rally to about 4,100 into the year. And if it's bad, I think we start retesting the lows going into next year. But here's what I want people to pay attention to. PPI came out hotter than expected, which means that'll trickle down to CPI at some point in time. The other thing I want you guys to pay attention to is the fact that wages are going to remain elevated for an extended period of time, as the workforce is kind of out of whack right now. And I tend to think that with the recent layoffs of the tech sector, that we're going to see more and more layoffs once seasonality is over. I think brick and mortar is going to get hammered. They're going to be hiring for seasonality, expecting a pretty good rush for Christmas and year end. And I just don't know if they're going to get that true spending habit that the consumer is used to spend, that the consumer has traditionally done at the end of years. Now, I could be completely wrong. The consumer can remain strong and start racking up more credit. But I tend to think we're starting to see a shift in the consumer, and it's starting to trickle through as layoffs begin. So brick and mortar will probably be late to the layoff show. And that's why I tend to still believe the second quarter of 2023 is where we're going to be official recession as layoffs begin. Earnings are dwindling, growth is not as strong as projected, and that's when we get kind of the true recession that everybody's looking for, and possibly true capitulation as well. But I tend to believe that CPI is going to remain elevated as wages are going to remain stickier. I just don't see people willing to take less money in the near future, and I think that's going to cause inflation to remain elevated throughout 2023. So while today was a fairly confusing, volatile day overall, what I think we're seeing here is that we're getting a early morning price of some volatility, and I tend to believe that it's probably going to lean a little bit more to the downside, but I think the VIX will cool off. I think that we'll probably see a little bit more buying pressure, and even though CPI probably comes in a little hot, I think initially the market reaction is going to be roughly a 2 to 3% sell-off, which will recover throughout the day and possibly even end the day green. From that point on is where I think we get the true sell-off towards the end of the week as options expiration take place and people position themselves for the next year. Could once again be completely wrong on this thesis, but as I'm seeing options buying for both the VIX and put buying for the S&P, people are still positioning themselves for an interesting volatile day, I believe tomorrow, hedging their portfolios and protecting the downside risk that might come with a hotter than expected CPI reading. Once again, guys, I think people are so positioned defensively here that the knee-jerk reaction is probably going to be a few percentage points, but I would not be surprised if we get some serious buying pressure and buy the dip crowd is still out there, and we actually finish the day a little bit stronger than expected, and the true sell-off is going to come probably closer to the end of this week. Just my opinion, guys. We'll see how this week plays out, but pretty interesting day. You don't normally get a VIX that's up 10% and a market that's up almost 1.5. Very, very rare to see that, and it definitely causes confusion. But I believe what it is the positioning that's taking place for tomorrow morning. So it's going to be an interesting morning for CPI, guys. Really pay attention to it. I think the knee-jerk reaction is going to be an initial sell-off that's probably going to be a decent amount, and then I think we will see buying pressure come back in as people are positioned very, very defensively, and I tend to believe that true volatility will probably come maybe closer to the end of this week. As always, guys, appreciate your time. We'll see what tomorrow brings. Going to be an interesting day, and we will see you in the next one. Peace.